All right. As of yesterday, we discussed about future trading, how the platform works, how you make profit even when the market is going down. Basically, we quite focus on the finance exchange. Now, today I'm going to also show you another exchange which you can use, which is known as the MEXC exchange. All right. So at this moment, I will have to start sharing my screen display. I hope you guys can be able to see my screen.
Yes, we can see your
Yes,
screen.
yes, you can see your screen.
All right.
What are
The
you
exchange
talking?
I'm talking about is this exchange here. I just circled it, known as the MEXC exchange. It's also one of these credible exchange that you can also use for future trading. So I decided to use this opportunity to like do some illustration on how to use it. There's no much difference on concerning how to use Binance, Future, and other exchanges. Most exchanges have similar HTML on their future trading platform. So they usually used to use what we call the user's experience to build their website. So you'll be able to be familiar with what you have seen on other exchange that gives future platform and what you see on other exchanges too. So they make it look more familiar that you will be able to cope up with it if you have traded future before. All right. At this point, I'll be opening the app and we'll take a look on how it looks like. Okay. Let me first close the app because I haven't opened before. We have to open it now. It should load the welcome page and everything. So it's still a trading it's still an exchange that you can trade coins available to be traded. Like there are some coins that might not be able to be listed on Binance, but you can still find it on this exchange. Binance is a very big exchange that before your coin is listed, you need to pass some certain criteria of security. So before they will get to Binance, they will be able to list on some low tier exchanges or some exchanges that have a lesser terms and conditions to list a coin or will not charge a huge amount of money to list a coin. So this is also one of an exchange you can use to trade both your spot and future. But tonight I'm going to focus on showing you how to trade on future. So for you to trade on future, you have to click here. You have to click here that you saw the right future. All right. So when you click here, you will see it will launch you the future platform. It will launch you the future platform. You can see it's kind of familiarized with the Binance exchange. Now, the same way that you used to fund on your Binance future account is the same way you fund there. So you have to deposit on your spot account by going to the last icon written as a wallet. You click deposit and you deposit USDT to your wallet. After you do that, all you have to do is to click transfer from spot to what you select futures, select the amount, like you select the coin which is supposed to be USDT, and select the amount if you have the available balance on your spot account. Once you select the amount, you click transfer and you have funded your future account. So any other thing here is something that we talked about yesterday. We have limit order and you can also use what we call market order. Market order simply means instant execution, while limit order simply means you want the price to be executed when it gets a certain level. All right. So the same way you trade on your future Binance in the same way it happens here. So if you want to select a coin to trade, it's still the same thing here. You just have to click there. If you click there, you select the available coins to trade on future. So it's still the same thing. Like I said, website owners usually use what we call the user experience design to design their website so that someone who has had a familiarized experience on other places can also be able to cope up with their own website and not find it more difficult. So let me try to open a position here so that you see how open position dashboards also look like. So to do that, I have to change this limit to what market. Just leave it as this BBO. It's just normal. Then let me say I want to select $1. Remember, this is still in isolated. All right. Look at this. Here you can see what is once you select the coin is in isolated X20. So it can still be changed. All right. If you want to change it, you simply tap there. You see this option mark. You just have to tap there. When you tap there, you can be able to select the X that you want. Is it times 20? Is it times 30? Is it times 40? Any X? Is it times? Let me just select times 10. All right. So you can switch between cross or isolated. So what we are going to be using is what isolated with what timestamp on this coin known as ASTR. And once I confirm it, you can see it has been changed from isolated 20S to isolated 10S. So to open a position, I want to open a position of $1 equity or margin, $1 margin, which will approximately be a cost of let's say $10 if I want to buy. So I want to buy. Let me select you. You have to be selecting to here that you saw margin. This is where you see the actual cost of the position you open. So you have to select is the exact amount you want to open. All right. So let me keep selecting. Let me say I select 8. I see 8 is approximately $1. So I'll just click what? Buy. Confirm order, and you see the market has executed immediately. Hold on. Hold on, sorry. Let me confirm something. Okay. Hold on, I also want to confirm something. Okay. Now let me correct something. There's kind of a difference here in Binance. If you look at this, sorry. If you look at this, you will see that at this particular point is where you're setting if you want to short. Okay. Why on the left point is where you set if you want to what long. So remember, I opened a long position, but I just immediately saw that it was on S20. So I have to confirm why was it on S20. Then I was able to identify that okay, it has 2 places to select your margin and your margin amount. So at the left side is where you search for long, while on the right side is where you search for what? Short. I hope you guys are not confused. Any questions so far? Any questions so far? All right.
On chat, they say it's clear.
All right. So now, if you look at our open position boards, you see. Hello. So if you look at your open position boss, you will see it's kind of familiar with finance open position boss, where you see your profit and loss, which is unrealized, which is this. You see the average price of your entry, the liquidation price, margin size, the total amount, including your margin that the total amount of the token you bought, a number, which is 4, nothing much. And if you want to set your stop loss and your take profit, hold on, let me clean this. You just have to click here. So you click stop limit, and once you click stop limit, it opens a box for you to set your take profit trigger price and stop loss trigger price. And once you select them, it also show you the exact amount you will get and exact amount you might lose. So for you to do that, you can't type in on this box. This box is like sealed. So what you have to do, you have to activate this button. You have to activate that you want to take your profit and also your stop loss. So you need to click this good mark dot for you to be able to make your inputs. To do that, I click here. You see it's now in a green color, and I can tap in this box. I also want to set the stop loss. I click here too, and I can also type. Now look at this. If I want to take the profit at 0.5, was I short? 0.2. My profit was $1.83, and if I want to set my stop loss as 1.25, sorry, 0.25. You see my loss is what? Okay, let me just make it 3. My loss will be what? 2.068 USDT. So once I'm done with this, I can just click confirm, and everything will be loaded. So if I also want to close my position, I can click flash close for everything to close immediately, like to close everything instantly. Or if I want to take my partial profit, I will just click this close here. This close here. I click that close, I'll be able to select the size by percentage that I want to close. Let's say if I want to close 0.5%, 50% of my position, which is a way of taking partial profit, I'll just click 50% and click this flash icon if I want it to execute immediately, or I can leave it. I can leave it and set the limit price of where I want the order to be executed. But at this particular point, I want to close the position immediately. So I have to select this flash icon and click confirm. You will notice that my margin has reduced from about $1 to 0.49 cents. Telling you that half of that position has been closed. Instead of closing on my position, why I was just trying to take partial profit. I hope it's clear. Exactly. Is that clear?
No.
What's your question?
Kindly take it over again, please.
Are you just coming?
No.
Where do you find it confusing?
Well, it's like I don't get the whole process.
Really?
Hello, Coach. Good evening.
Good evening.
Yeah, actually, this is different from Binance. A little bit different from Binance. So it's always difficult when you say the same app like Binance, but it's totally different because there are some coins on Binance that is not here. I understand.
The thing is that it's not compulsory to use the exchange, but I'm just trying to also let you know we have points that are kind of different from Binance. So whenever maybe you have a coin and you want to trade or future, but it's not available on Binance, on the exchange, you can try to make use of the exchange to trade. So the thing is that why listening to this for the first time? This is your first time seeing this thing. You can kind of find it sophisticated to cooperate with it. But in the meantime, once you have the exchange accounts, open your platform, one or two times you just get familiarized with the platform. All right?
That's it. How you doing?
Good evening. Please, I have a question.
Alright, go on.
While you were closing the position, when you clicked on 50%, what are the advantages or disadvantage of closing it partially, not closing it fully? When do you know? How do I know when to close with 50%, with 25%, or 75%?
It depends on what you. All right. It depends on what you. You don't want to be on that trade anymore. That's when you select what 100%. Well, for example, let's say when you see a signal, your signal has TP1, it has TP2, it has what TP3. So you now say, okay, if your trade reach TP1, you will take some profit, right? You see TP1, you take some profit. So now, how do you take that some profit? If by closing some certain amount of your position. Do you understand? Because you still want to be on that trade, but you just want to secure some profit out of it before anything could happen. Exactly.
Okay, sir.
Any other question?
Yeah, Coach, good evening, sir. I have a question.
All right, good evening.
Hello?
I'm with you. Go on with your question.
Okay. First of all, I've joined quite a while now. I'll be following up, and I want to know which exchange is this so that I can be able to take note of the exchange.
Okay, this exchange is MEXC exchange. MEXC exchange. I will try to drop the link for you guys in the group.
Okay. Now,
all right.
I also have another question. I have discovered that when closing order in Binance exchange, at times you close order with profit and they end up getting nothing, as well debiting you from your main money. So what could be the cause? Or is it a mistake or is from Binance?
Okay, let me give you some starting points that can be the problem. All right. Okay. Remember, on Binance, whenever you open and close position, Binance charges you a trading fee. All right. This fee is different from your margin fee, as in from that margin loan they gave you. That one is different. But when you open a position, they have to fill your position on the order book. And by that time, there is a particular trading fee that will be charged. You want to find out, you can in your Binance, you will see something like this. Hold on. In your Binance, you see something like this. Like this here. All right. This simply means history book. Now, I'm going to click that and you're going to understand what I'm trying to say. When I click that, you see order history. Then you see this trade. You see this one. This one was when I opened the position. I opened a sell position. This was This one was when I closed it. Okay, sorry. This one was when I closed a short position. This one, the next one was when I opened a sell what position. Now, if I should expand them, or even just by looking at them, you will see that whether I make profit or not. Hold on, let me clean all these things to make it a clean chart. Okay, if you look at this one, let's say this was when I opened the position. You will see that there was a fee charged here when I opened that position, which is 0.0059. This is a position of just $1. All right, and you can see the fee here. Then when I closed it to at this point, they also charge me what? That fee. You see? So for example, now this particular year now, my profits, my unrealized profits and loss, that is PNL of closing, was 0 minus 0.05. So if they want to settle your order, they also have to subtract this fee from it. You see? So maybe you might be closing your order at no profit, no loss, but finance will have to charge you that fee.
Yeah. I know.
You understand?
I know that.
So
I know that. I know that.
You
Hello,
see?
coach. Yeah, coach. I know there must be charge fee. Like,
okay.
Like I experienced closing order with $4 profit or $5 profit. Or I have closed order $10 profit, and I was not credited. Rather, I was debited from my capital.
Really? Wait,
yeah.
when you close the order on $10 profit, on how much trade was that? Like how much capital trade was that? How much margin?
Okay, let's say $50 margin.
And you open a trade.
Yeah,
and you open a trade on $10 profit, and you're closing it, and you end up not seeing profit.
Yeah, if I see profit, I was debited from my capital, and they have been expressing that every time. So I don't know.
There are some factors that can be causing that. Another thing I also find out is, for example, if you set your stop loss and take profit, when they are triggered, you find out that you're not getting exactly what you saw when you sent them. You see that there will be a price adjustment because finance will have to wait to fill that price or to fill that order before it is being settled, while by having some kind of a volatile adjustment. So a lot of things can be causing that, but it shouldn't have been as you are kind of describing it, like on a $50 order, the $10 profit end up with nothing, which is that $10 profit should be around 20% of your margin. It shouldn't be taking everything away. Like you should be getting at least 17% of it. So maybe later I will look into your case, but that is not supposed to be normal. All right.
Okay. Which are the best exchanges that you need to use for future trading? Because I've been having issue with that is causing me. It's causing me feel like whenever I want to close trade.
Really? There are still some good exchange. We have a Gate.io. We have KuCoin. We have a Bit something. I will require from me. Bit something. We have a lot. We also have a FTS exchange. All right. The thing is, finance has #1 volume and choices of trade or future. So they are kind of the winning team at this point. But there are still exchanges you can use for your future. So a lot of them. But the thing is that you can have limited coins to trade. Like they might not have all the coins you need on their future platform. Well, there is nothing bad trying other exchanges. Later, I'll drop some list of other exchanges you guys can use in the group. Great.
Okay, now another question that I really want to ask is, there are this. Are you with me, sir?
I'm with you.
Okay. I don't know if this particular exchange has that option. Even in Binance, I don't know. I think I was discovering something like setting stop loss and take profit. Like setting it will be you can set it 10%. If the coin goes up, if you make profit of 10%, it will keep adjusting. I don't know how to describe it.
Okay. No. I understand. I understand what you are trying to say. Trailing stop loss and take profit.
Okay.
We call it trailing stop loss and take profit. I have not seriously. I have not used it on Binance, but I don't think Binance have it because when I wanted to use it, I couldn't find it on Binance. All right, and I think it's rare to find it on Future. Where you can usually find it is on spot trade. So all you just have to do now is dive and research on how you're going to do a research is dive research on exchanges that has a trailing stop loss on Future. Then after you find the because it's not any exchange that have it that you just jump in, you need to check on the credibility of that exchange. And we can also help you on that when you find one, chat. Great.
Okay.
Any other person with a question? I guess none for now. All right, let's kind of move to the major technical analysis. This is actually what I giving you guys like a elaboration on how those platforms work. So that whenever you learn this, you'll be able to apply them. All right, this particular book, all right, it's called, there's a book I used to teach, it's called Complete Guide to Price Action and Forex. All right, so basically what we use on our technical analysis, the major thing you need to know support and resistance, you need to know price action. All right, so there are a lot of things you need to know, but these are one of the top two. Support and resistance, price action, we have market structure, we have a fib, we have a lot of, we have price patterns, stuff like that. So, but the major ones are support and resistance, then your price action. So I'm going to drop the book in the group. This book is not a free book, but because of this community, this book particularly is free for everybody. All right. When you open this book, don't go ahead to read everything, except you want to be a forex trader. That's when you're going to read everything. Okay, because the book was basically structured for everything concerning forex. But all these trading instruments can be used on any trading. So from this book, we are picking their support and resistance, their candlesticks, and their price action. These are the three topics you'll be focusing: candlesticks, support and resistance, and price action patterns. So you're going to focus on this whenever I drop the book. I'll try to drop it tonight, so you guys can read ahead, try to practice, grab the skill. So let's focus on support and resistance. All right. Okay. At this point, I'm going to use my own change. But if I start reading what is written in this book, you might find it kind of confusing to understand. So I'm going to use what I know about support and resistance to explain to you guys. All right. So when you talk about the support, I'm going to use house construction for example. Now, when a building is trying to fall and they say, let's give it a support, what does it mean? It means that it helps that building to stay up. Instead of it to be falling, rather it will bounce up. Let's say if you set a support and something is falling, let's say something is falling from the air, and you set something as a support for it. Once it hits that thing, then you set as a support. is expected to what? Bounce back. So theoretically, you set a support on the trading market or the financial market is at a position or at a price where the market tends to what? Bounce off. Why what? Going downward. So it means when the market is coming down, that particular position where it will what? Bounce off and start what? Making reversal is known as what? Support. When it's trying to what? Support that market and throw it backward. Why the resistance is still what? Vice versa. Where the market is going up and what is being thrown back again. It's called what? The resistance. It's just like when you have a ceiling and you throw a ball to that ceiling. You already know that once that ball hits that ceiling, it is tense based on law of gravity. I'm going to use gravity on this one. It tends to what? It's expected to what? Push downward. Because it has already what? Hit a resistance. Why that ceiling is serving as what? A resistance on that law of what? Gravity. So, but when this market, in this crypto market or financial market, any price or any price level where that market tends to bounce your what? Your resistance. Now, know it. It doesn't mean that every resistance is expected to what? Bounce the market off. Or you're not expected to believe that every support is meant to what? Bounce the market off. But what we are trying to tell you is that at any resistance or support you see, you have to keep in mind that there's a possibility for the market to what? Thrown in the other way what? Direction. So I'm going to try to open my trading view and try to use my trading view to illustrate how this looks like. All right. Let me select a coin for example. Let me select BTC. BTC USDT. All right. What I was saying is that hold on. Let me find. So what I'm saying is when the market is going down, let's say the market is going down, let's say the market is doing like this, doing like this. It means that when the market was going down from the first time and reverse at this first point, this means what? Hope you guys can see my screen.
Your screen is off. It's not on.
Okay. All right.
Okay, it's back.
Okay. All right. So I said before, for example, let's say the market was coming down, bounced off, then was able to break, come again, was able to break. You know, this is how the market structure used to look like. So it means at this first time when the market was coming down and it bounced off, this price zone that is bounced off is called what? The support. Do you understand? So whenever the market is coming down and get to a particular price level, it tends to what? Bounce off. Most times, it can break that level and create what? A new support or what? A new resistance. So, but now I'm talking about support. Now, after it bounced off, it came again and was able to break it. You see? So when it break it now creates what? A new resistance. Now understand this rule. Whenever a support is broken, that support, that former support is expected to be what? A resistance. Whenever a resistance is broken, that former resistance is expected to be what? A support. Now, what do I mean? After it has broken, the market is coming up again. After it has broken this first stage, what you expect the market to do is when it gets to this price level that was broken before, it will start serving as a what? A resistance. Trying to resist that market because a new resistance has been formed after the support has been what? Broken. So this is how support and resistance will work. The same thing applies to when you talk about the resistance. So when the resistance is broken, you are expecting that whenever the market comes to that price level, it should serve as what? A support by showing some rejections. So depending on the volatility of the market, it might not serve as a support, but you will see a sign that definitely that place is support, but it's get what? Broken. So this is why you can't just use one factor to determine your trade. So you need to combine a lot of technical factors with positive response from them to determine your entry and the possibility of having a winning trade. So that's saying that support when the market is come down and bounce back, that particular price bounce back is support. It doesn't mean that whenever you get that support, you buy, you get resistance, you sell. Because it can break. So there are still some certain factors which you can use to determine whether will you break it or will you what? Stand. So you must learn a lot of factors of what? Technical analysis to be able to determine the winning trade. So right now I'm going to try to illustrate this on a live chart. I'm going to kind of use a BTC chart so that you will kind of understand the realistic of what I'm trying to say. Okay. Now, let me bring my lines. I'm on this updated trading view, just change everything. It doesn't look like how it used to for me. Whoa. Okay. Let me draw a line. Let me draw a price level. Okay. Okay. All right. Now look at this. Let me try to get to all this challenge and Yavala. You guys should not be upstairs, please. All right. Now, if you look at how the market first it was coming down from here. Then at this particular point, it bounce off a little. But because of the volatility of the market, it has to what? Break it. Now, like I said, when the support is broken, a new resistance is what? Formed. Now, what did you see happen? When the market came to that former broken support, it did what? It rejected it and bounced back. It came again, it rejected it and bounced back. It came again, it rejected it. Like it did so many. Now it has broke it. It has become what? A support. It came back first time, tested it, and bounced back. You see all this why? It's trying to come close, but because there's a support there, it's not trying to come close, it bounced back. It came again here, we tested it, it just have what? As a support. Like I said, when the resistance is broken, the new support is what? Formed. So at these particular levels, hold on, let me clean all these things. So at this particular level, these levels, after getting broken, has become what? A resistance. Now, all those 75%, when the resistance is broken, it's time to serve as what? A new what? Support. So at this level that it got broken, it right to this level. It came back and served what? As a new support. So you as a trader, this support and resistance should be your what? Your concentration zones. You should be looking at them to know what the market will react. If the market will create what? Rejections at that particular what? Price zones. All right. So the same thing applies as we continue. You make. All right, so that applies as we continue. You see this long wick here that came down close to that zone, but because of the volatility, because of it served as a support. Point two. You see what happened there? You still get to that point again, it still bounce back before what? It gets broken. Now, once it gets broken here, a new resistance has been what? Formed. You can see what still happened when it first came there to test it. It tested several times because it also what? Got broken. So it's just a simple kind of market structure, support and resistance. Once the support is broken, a new resistance has been formed. Once the resistance is broken, a new support has been formed. Any question? Any question before we round up?
Anyone who thank you, coming.
Good evening, Coach. Please, a quick question. This app you use for your markings, can you please tell us the app?
This is TradingView.
Oh,
TradingView.
Okay, and it comes with all these highlighters.
Yes.
Okay, thank you.
It has everything you can use to illustrate. Any other question?
Coach, sorry, you said the app is TradingView.
Yes.
Okay. Thank you.
All right. Any person with a question before we round up?
Hello, sir.
Yes.
Hello, Coach.
Yes, I'm with you.
Oh, sorry. I'm having a network issue. Yeah, how can someone know when a coin, like these lines will break a support to form a resistance?
That is, there are some certain things you can use to tell. The market FA, you guys must have learned FA. FA is different from TA. FA can be what the social media are talking about the coin, whether there is fraud or whether there is an investment in the coin. For example, let's say if a coin is at a support and the fraud now came in, definitely that support will broke. But if it's on a support, and let's say a very impressive news came about the coin, definitely it will not break. It has to what bounce off. So it depends on the FA surrounding that particular coin. Another thing is again is that's what we call price patterns. Now you still get to that stage when you draw your price patterns, and the particular price structure is a sell structure, and that coin is at a support. Definitely that support will get broken because a sell structure was forming. You see that? So there are still some other factors, and one by one you will still get to that point.
Okay, sir. All right, sir. Thank you, sir.
All right.
Thank you, sir.
What about your question? Another person. Sure. We are going to draw conclusion to our class tonight. And I hope you guys enjoy the class. Thank you, guys.
Thank you, coach.
What do you say?